What's going on, guys? Bexio, and we have the stock market in a pretty bad spot with the indexes not doing great and the economy in a bad spot with a lot of warning signs and recessions looming. So, what does that mean for the near term future? Is there stuff to really worry about, or is this all just make believe and people making the worst, thinking the worst situation that could come out of all of this? Well, Jamie Dimon, who is the CEO of JP Morgan, he actually came out and talked about this and saying that we need to brace yourself for an economic hurricane caused by the Fed and the Ukraine war. So we can see he said, I said there's storm clouds, but I'm going to change it. It's a hurricane. So he originally was someone, and he actually has been kind of flip-flopping a little bit here, because before he did say that he's like credit lines were great, consumer was in a great spot, and then like a week later he says this, saying there's a economic hurricane coming. My God, it's gonna be bad. So he's, maybe take it with a grain of salt what he says, but basically what he's saying here is, he thought it was going to be bad. Now he thinks it's going to be really bad, saying nobody knows if the hurricane is a minor one or a super storm Sandy. So that is true. No one knows what's going to happen. Everyone's going to be preparing for the worst, because if you don't, then you could get really caught off guard if it is worse than you plan. So you always plan for the worst, and then if it's hopefully it doesn't get there, and you can actually do a little bit of recovery and make it out. Like he says here, JP Morgan's bracing ourselves, and we're going to be very conservative with our balance sheet. Expect every single company to do this. We're already seeing that with all the companies coming out and freezing hiring and saying, and even laying people off. And it's just not a great place right now. Saying these are all the reasons he's got here, saying the end of the Federal Reserve's cheap money era, inflation at multi-decade highs, exacerbated by supply chain disruptions, and the pandemic has sown fear that the Fed will inadvertently tip the economy into recession as it combats price increases. We already know that all of that have been problems the entire time. We know inflation, massive problem. Because inflation's staying high, that means the Fed will not come and bail out the market like it did before. It's got to get that down first, trying to get it down without causing a recession. But ultimately, I mean, we all pretty much think there's going to be a recession. I don't think they can do it without causing one. So I don't think any real investor thinks that. I don't think any big company thinks that, and that's why they're all preparing the way they are. So it even goes on to say, right now it's kind of sunny and things are doing fine. Everyone thinks the Fed can handle this, but that hurricane is right out there down the road coming our way. I don't think there's a lot of people that think the Fed can do this. I don't think there's a lot of trust that the Fed can actually come down and not have a recession and control inflation and not have the markets crash. I don't think there's a lot of people out there that think the Fed can do this. So maybe this is a little optimistic from him. But the hurricane coming, it does seem inevitable that a recession is coming, that the Fed can't handle this, and that maybe things even in the stock market get worse. I mean, the S&P isn't even in bear market yet. And you can see him talking about central banks here, saying they didn't have a choice because there's too much liquidity in the system, and then they have to remove some of the liquidity to stop the speculation, reduce home prices, and stuff like that. So that is a big thing, and that's actually one of the good things out of a recession, if you want to look long term after recessions are done, is that it does get rid of companies that shouldn't exist. There are zombie companies that are here that are only around because of cheap debt so that they can keep financing their company moving forward. And the good thing that comes out of that is that that money and capital and resources and people working in this company that is literally going nowhere and only exists because of cheap debt gets to get redistributed and reallocated, and people get to go and work on real companies, and the money gets to go and get put to work in real businesses and growing that. So it is a good thing that can come out of recessions long term, but it's always painful during the recession. And then it goes on to talk about the oil prices and how the Ukraine war is affecting it. We all know it does have an effect on it, saying almost the price of oil almost has to go up in price, and even talking about maybe $150 to $175 a barrel, because of that was like World War II pricing. If we look at oil right now, it is absolutely just up and to the right. We thought oil might have peaked back in February-ish time. It was like 115, started to kind of go down here, and then it's just been a rocket ship up to 120. If we even go back all time, this goes to 1984. We're approaching all-time highs, at least from 1984, whatever this is measuring, which was 140 a barrel in 2008. So the financial crisis, 2008, 140 a barrel, and we're only $20 off of that. So do we reach new all-time high in oil prices? I mean, at this point, it seems pretty likely. And that has an effect on inflation. That has an effect on how the Fed will react, and obviously keeps the Fed from rescuing the day and printing money and saving the market. But we can even see companies, giant companies like Tesla, even stating, this was on Friday, the shares fell 3.5% because Elon Musk said he has a super bad feeling about the economy and wants to cut about 10% of Tesla's jobs. So not good to have Elon Musk saying he thinks the economy is in a bad spot and wants to cut jobs in preparation of something bad happening. Not even that something bad's already happened. So that is not a good sign. And ideally, you want to cut jobs off of more than just a super bad feeling. But if he has a bad feeling, cutting jobs, trying to save money and make sure the company can move on. There's two different ways to look about this when people are cutting jobs. Is that, yes, people are getting laid off, losing their jobs, and doing all of that, which is terrible, but they are saving the other part of those jobs. So if you have 100 jobs and you have to cut 20% and 20 people get laid off, you're essentially saving 80 jobs, because if you don't cut those jobs and the company goes completely out of business, then all 100 people are out of a job, and now everybody is gone instead of saving 80%. But that's just more of an optimistic way to look at it, I guess. And we can also see Gemini coming in saying that they're cutting staff by 10%, blaming the crypto winter, because crypto prices are down, trading volumes are down. Gemini, being an exchange, makes a lot of their money from trading fees. So with less people trading because the price is down, less interest in the space, less money they make. So they are cutting jobs by 10%. We can see the entire crypto space. We had Gemini 10%. Bitso is 80 people. I don't know what percent. I don't know why this is in people, not percent, but okay. Robinhood cut 9% of its staff. And then Coinbase has a hiring freeze where they also put on their freeze here saying Coinbase to extend hiring pause for both new and backfill roles for the foreseeable future and rescind a number of accepted offers. So that's a big thing. A big talking point right now is Coinbase rescinding offers. So people that they already accepted, now they are not accepting them and kind of taking them off. And we can see here, Coinbase rescinding job offers for people who haven't even started yet. And this talks about it right here. We will rescind a number of accepted offers. This is Coinbase coming out and talking about it, kind of just going over their thoughts and how they're going about it. So it's just tough with a lot of companies. I mean, these are big companies. Coinbase is multi-billion dollars. Gemini is a giant company. They're $1 billion. Tesla was $1 trillion. It's down from there, but even Tesla is cutting jobs. All of these companies are cutting jobs, preparing for the worst, and knowing that things are just not in a great spot. And you look at Coinbase. Even Coinbase's chart is just, from its IPO price, just a collapse, really. It's just down and to the right. It's not a chart you really want to get behind, and it kind of reflects how recent times have been, and not really Coinbase's company as a whole. So you got to know that times like this is where the stock price can get away from the fundamentals of the company, where if the company is a good business, it'll make it through this. We see it with the dot-com crash, with things like Amazon, where the stock price fell 80, 90%, drastic falls. But if you held on to it, it grew to be a tech giant, multi-trillion-dollar company. It's just moving on, and getting through that period is rough and not fun. But the stock price and the company don't always reflect each other. Like with financial conditions as they are right now, can obviously plummet stock prices. Well, the company might be a good business and might be fundamentally sound, but the market isn't in a place for that to be reflected. But right now, I don't think it comes as to a surprise to anybody that the market is in a tough spot. The economy is in a tough spot, and globally, lots of things are in a tough spot. So it's not surprising to anybody to see prices falling. I think a lot of people are just looking to get through 2022 and seeing if things can be a little bit better in 2023, and maybe if inflation can curve down, and then the Fed might be able to come bail the market out. Some people are even expecting that to happen by the end of this year. But that's gonna do it for this video. As always, don't forget to smash the like button and subscribe on the road to 1,000 subscribers. I'll see you guys in my next